Greetings, financial enthusiasts and crypto-curious alike. Welcome to our analysis of two investment heavyweights, Bitcoin and blue chips. Today, we're diving into the performance of these two giants, examining their return on investment over the past decade. Bitcoin, the digital currency that's taken the world by storm, versus blue chips, the tried and true stalwarts of the investment world. Remember, we are not financial advisors and you should do your own research before making any investment decisions. Diving right into it, let's first unpack Bitcoin. Invented by an anonymous person or group known as Satoshi Nakamoto, Bitcoin was introduced to the world in 2009. It's a decentralized digital currency, without a central bank or single administrator, that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. But what makes Bitcoin really stand out is its finite supply. There will only ever be 21 million Bitcoins. This scarcity is one of the reasons why Bitcoin is often likened to digital gold. However, with great potential comes great volatility. Bitcoin's price can swing wildly in a matter of hours. This volatility is often seen as a drawback, but it's also part of what makes Bitcoin so exciting for investors. It's this roller coaster ride that has the potential to deliver substantial returns on investment, or ROI. ROI is a performance measure used to evaluate the efficiency or profitability of an investment. When it comes to Bitcoin, the ROI can be astronomical. If you had invested just $100 in Bitcoin in 2010, it would be worth millions today. But keep in mind, past performance is not a guarantee of future returns. Now, while Bitcoin's high returns can be enticing, investing in Bitcoin is not for the faint of heart. The cryptocurrency market is highly speculative and can be influenced by factors such as regulatory news, market manipulation, and macroeconomic trends. That being said, Bitcoin has proven itself to be resilient. Despite numerous price crashes, it has always bounced back, reaching new all-time highs. This resilience, coupled with its potential for high returns, has led to Bitcoin being considered a legitimate asset class by many investors and institutions. Bitcoin, a volatile yet potentially lucrative investment, has certainly made its mark on the financial world. This digital currency has not only revolutionized the way we think about money, but it's also challenged traditional investment strategies. Whether or not Bitcoin is a part of your investment portfolio, it's undeniable that it's a fascinating subject worth understanding. But what about the other side of the coin? Traditional investments like blue chips. Let's unpack this concept. Blue chips are the titans of the stock market, the stalwarts of the financial world. These are companies that have stood the test of time, weathering financial storms and economic downturns. They're like the big, sturdy oak trees of the financial forest. They may not grow as fast as some of the smaller saplings, but they're reliable, steady, and have a proven track record of success. Historically, blue chips have been synonymous with stability and reliable returns. They're typically multinational corporations with a large market capitalization, often in the billions. Think Coca-Cola, IBM, or Procter & Gamble. These companies have built a reputation over years, even decades, of consistent performance and steady growth. Now let's talk about the concept of ROI, or return on investment. This is a measure used to evaluate the efficiency of an investment, or compare the efficiency of several different investments. In terms of blue chips, we're talking about a typically slower, but more consistent ROI compared to some other types of investments. It's like the tortoise in the race with the hare. Sure, it might not sprint ahead at breakneck speed, but it keeps plodding along, moving steadily towards the finish line. When you invest in blue chips, you're not just buying a piece of a company, you're buying into a legacy, a history of stability and growth. You're investing in the belief that these companies will continue to perform well, continue to pay dividends, and continue to be leaders in their respective industries. So where does that leave us? Well, despite the exciting potential of alternative investments like Bitcoin, there's still very much a place for blue chips in a well-balanced portfolio. They offer stability in uncertain times, reliable returns over the long term, and a chance to own a piece of some of the world's most successful companies. Blue chips, with their stability and reliable returns, remain a favored investment choice. With both players introduced, it's time for the ROI showdown, Bitcoin versus blue chips. Let's start off by saying that both Bitcoin and blue chips have their own unique attractions and drawbacks when it comes to return on investment, or ROI. And while we're not financial advisors, we're here to help you understand the dynamics of these two investment avenues. First, let's tackle Bitcoin. Known for its volatility, Bitcoin can offer extraordinary returns. For instance, if you had invested $1,000 in Bitcoin back in 2012, today, you'd be sitting on a fortune. However, this high reward comes with high risk. The value of Bitcoin can plummet just as quickly as it can surge, making it a roller coaster ride for investors. On the other hand, blue chips are the stalwarts of the investment world. These are shares in large, reputable companies that have a history of stable earnings and paying dividends. If you had invested the same $1,000 in a basket of blue chips back in 2012, your investment would have grown steadily over the years, providing you with a solid and relatively stable ROI. So, which is a better investment? Well, it all comes down to your risk tolerance. If you're a thrill seeker who doesn't mind the ups and downs, you might find Bitcoin's potential for high returns appealing. But remember, the risk of losing a significant portion or even all of your investment is real. If you're more conservative, preferring steady growth and stability, blue chips could be your cup of tea. They offer lower but more predictable returns. And remember, these companies often pay dividends, which can be a nice bonus. In conclusion, the Bitcoin versus blue chip showdown isn't about declaring a winner, it's about understanding the risk-reward ratio and choosing the investment that aligns with your financial goals and risk tolerance. Whether you're a risk taker looking for high returns with Bitcoin or a cautious investor seeking steady growth with blue chips, the choice is yours. Let's quickly recap our ROI showdown between Bitcoin and blue chips. We've explored the nature of Bitcoin, a high-risk, high-reward digital currency, and blue chips, stable stocks from established companies. We've analyzed their performance and potential returns, highlighting the risk and reward profile of each. Remember, we aren't financial advisors. Always do your own research before making investment decisions. Thanks for watching. Be sure to like, comment, and subscribe. And hit the bell notification so you'll get updates anytime we upload a new video.